So I'm excited to share that I just bought my first house in New York City. Obviously, we are still in the very early stages of moving in, but I wanted to make a quick video explaining why I bought this house and share some of the strategies that I use to turn it into a smarter financial investment, despite everyone saying now is a terrible time to buy. Why are people saying this? Well, it's really three reasons. Number one is that interest rates are still pretty high. As of August, rates are around 6.6%, which is double from 5 years ago. Number two, home prices are at record high levels, right? The median price of a home now costs over $440,000. And number three, there's just a lot of economic uncertainty going on. But despite all these very valid reasons, it still felt like the right time for me to buy a house because of two main things. But first, just to clear the air a bit, because I know there's going to be some haters out there writing in the comments, must be nice to have rich parents, but sorry to disappoint, but there is no secret trust fund or rich uncle. I actually didn't grow up with money, and I bought this house with my own money. Now that that's out of the way, the first reason I felt like it was the right time for me to buy a house is because of lifestyle. One of the biggest drivers in my life has been always trying to live a life of financial freedom, right? Meaning I want to feel free to do what I want when I want. And this has been a very stark pattern since I was a kid. So for example, my parents never gave me an allowance or spending money. So I decided to start a mini Willy Wonka operation selling candy to my classmates. And it was the same thing when I started working in corporate America. I hated feeling trapped in a toxic job, so I started my own media company and left. And over the past year or so, I started to feel like renting was doing the same exact thing to me. It was keeping me in this very weird state of permission-based living. Even though I was renting the apartment, it never felt like it was my apartment. My landlord could do random inspections if he wanted. I'd get stressed at the end of every year, wondering if he would renew my lease, because if he didn't, then I'd have to uproot my entire life on his timeline. My apartment never felt like home because everything we did to decorate it, I would still second guess and wonder if that's going to impact the security deposit. There's a lot more reasons, but at the end of the day, I always felt like a guest in my own home. And to me, that's not freedom, right? That's just permission to exist in someone else's space. And on top of lifestyle, family is super important to me. I grew up here in New York City, my entire family is here, and I try to see them at least once a week, meaning that I'm gonna be here for many, many years. So if I'm gonna be here for the long term, it doesn't really help that rent in New York City is crazy expensive. In 2016, the average monthly rent for a one bedroom was $2,800. Today, in 2025, the average rent here is over $4,000 a month. The reality is New York City real estate is only gonna get more and more expensive because there's only so much space here, and I don't see demand going anywhere anytime soon. So if I'm gonna be here for a long time, it makes sense for me to start building equity in something that's actually mine rather than keep paying someone else's mortgage while rent and real estate prices continue to go up. The second key reason I felt like it was the right time for me to buy a house has to do with finances. And this one is a bit of a roller coaster ride, so just bear with me. Fortunately or not, my brain always tries to look at things from an investor's point of view. Like I always want to try to maximize my ROI or my return on my investment, which basically means I always try to maximize the use of my money. For example, if I had an extra $100,000, I would think to myself, would I be better off investing that amount of money in the stock market or putting that as a down payment on a house? And if you very quickly run the numbers, one is very clearly better than the other option, at least on the surface. For example, looking at the historical performance of the S&P 500, which tracks the 500 biggest companies in the US, and just comparing that data to the home price index, which measures how much home values has grown over time, it basically tells us that while both investments performed pretty similarly through the 70s and 80s, stock market returns have dramatically outpaced housing returns over the past few decades. More specifically, the S&P 500 has averaged roughly 10% growth per year compared to homes, which has averaged around 4 to 8% growth. Which basically means that if I was only looking to maximize my ROI, I would technically be better off continuing to rent and investing that $100,000 into the stock market. So knowing this, why the heck did I buy a house if I could get a better ROI with less work by just investing in the stock market? Well, after many, many hours of self-reflection in the shower, the answer is pretty simple, and it might not be as satisfactory as you think it is, right? I basically came to the conclusion that in life, you can't look at everything from an investment perspective because not everything can be assigned a dollar value. There are countless non-financial benefits to homeownership. Like, how do you put a dollar value on a sense of stability, a sense of security or peace of mind, right? Of not having to deal with an asshole landlord, of having the freedom to do what you want in your own space. There's just something about walking into a house that is yours versus always feeling like a guest in someone else's. But to be clear, just because I let the emotional side of my brain play a bigger role in this specific financial decision, I didn't just flat out ignore the numbers of everything. If anything, once I acknowledged that I was very likely going to buy a house in New York City, I pretty much doubled down on trying to make my decision as financially smart as possible, given the circumstances. All right, so here are the 5 strategies and thought processes I used to make it a better financial investment for me. First, here are my thoughts around interest rates and home prices. I know that many people are waiting on the sidelines for interest rates to fall because they'll think it'll make homeownership a lot more affordable. And yes, while that is partially true, there is a bit more to the story. For example, let's say you're eyeing a $400,000 house. If you get a 6.5% interest rate, then your monthly payment would be around $2,528. But if interest rates fell by just 1% to 5.5%, then your monthly payment drops to about $2,271, meaning you're saving around $257 every single month, which sounds pretty great. But remember, you're not the only one waiting on the sidelines. When interest rates fall, it's going to be like Black Friday in 2008, and people are going to go absolutely wild. More people are looking to buy a home, which means more competition, which drives up the prices, which is exactly what happened a few years ago. In early 2021, the 30-year fixed rate mortgage fell to 2.65%, and in that year, the Case-Shiller Index, which is the leading measure of US home prices, reported an 18.8% jump in home prices. So in my case, even though interest rates are relatively high right now, that technically means that there's relatively less competition and I have more bargaining power as a buyer. If interest rates fall next year, then that's fantastic. That just means I'll refinance to a lower rate. And if rates don't fall, then I'm still okay because I can live with my current rate after running the numbers. And just a very quick side rant, one thing that doesn't make a lot of sense to me is that most people, right, around the finance community agree that you cannot time the stock market. But for some reason, most people think that they can time the real estate market. But the truth is, you can't. There is no perfect time to buy a house. There are just moments that work for your situation. Number 2 is house hacking. So I bought a multifamily house in New York City, and I'm gonna be house hacking, which basically means when you live in one unit and you rent out the other units. This allows me to reduce the cost of my overall housing expenses while still being able to build home equity. So for example, let's just say before I bought the house, let's say I was paying around the average New York City rent, which is $4,000 a month. Now let's say I bought a 2-family house and my monthly mortgage is now $7,000 a month. If I live in one unit and I rent out the other unit for $4,000 a month, then I can use that as rental income to pay a portion of my $7,000 mortgage. I also have to pay the remaining $3,000 out of pocket, but that's still effectively less than what I was paying for rent before. And now I get to build home equity. Obviously, this is an oversimplification, right? There's additional costs like repairs, maintenance, and other stuff you gotta factor in, but that is house hacking in a nutshell. Next is leverage, which is just a fancy way of saying I am using other people's money to build wealth. For example, let's say I want to buy a house that costs $100K, but I only have $20K in cash laying around. That's not a problem. I can put 20% down on the house and borrow the remaining $80,000, meaning I'm effectively controlling a $100K asset with only $20K of my own money. Now here's where it gets fascinating that a lot of people miss out on when they're just comparing the S&P 500 to the house price index, right? If the value of the house goes up by 10% from 100K to 110K, that is a $10,000 increase in value. And since I only put 20K of my own money into that, that 10K gain equals a 50% return on my 20K investment. That's a rough and quick example of how leverage allows you to build wealth faster. Now, of course, this can also work against me if the real estate market crashes, but I'd argue that New York City has a pretty strong real estate market given the demand and supply. And even if it does fall over the next couple of years, over the long term, real estate prices in New York City is pretty much guaranteed to rebound. Number 4 is my mortgage is guaranteed to get cheaper over time, and this is where inflation actually becomes one of your best friends. For example, let's say I have a 30-year fixed rate mortgage and I pay, let's just say $1,000 every month towards it. And let's say my salary is $5,000 a month. That pretty much means I'm paying 20% of my annual salary towards these mortgage payments. Now let's say inflation gets really, really bad and causes the price of everything to double. Hopefully my salary will also double from $5,000 to $10,000 a month, and everything becomes twice as expensive. Except the price of my mortgage, right? That price doesn't change at all because it is a fixed number. I will still technically have to pay $1,000 a month, meaning if I used to use 20% of my annual salary towards my mortgage, thanks to inflation, now it's only 10% of my salary. Meaning my mortgage has effectively gotten cheaper, which is great for me, not so much for the lender. Next has to do with taxes, all right? So real estate investing offers a lot more tax advantages than just investing in the stock market. So for example, I can get a tax deduction for many different expenses that I incur during my time of owning a home, such as my mortgage interest, my property taxes, depreciation, renovations, and a lot more. And all these tax deductions allow me to reduce my taxable income by quite a bit. On the other hand, stocks don't really offer as much in terms of tax savings. For example, if I sell my stocks at a profit, I will have to pay capital gains taxes on that. Versus with real estate, if I sell my house in the future, I can defer capital gains taxes pretty much indefinitely with a 1031 exchange. And this is only the tip of the iceberg, okay? There are a ton more financial strategies that I use in order to make this hopefully a smarter investment for me. And I'm gonna cover all that in a future video. But basically, I knew I wanted to buy a house. I knew the current economic situation wasn't the best, but I finagled it in a way that made it a smarter financial investment that should pay off in the long term for me. But notice I said should. All right, the truth is, I don't know. No matter how confident I seem about this decision right now, no one knows because no one can time the market and no one can tell the future, right? Maybe 10 years from now, I'm gonna run the numbers and find out that I would have been much, much better off renting. Or maybe I will be ecstatic that I'm sitting on a ton of home equity right now, celebrating that I purchased when I did. But more realistically, the outcome is probably gonna be somewhere in the middle, and that's completely fine with me because I didn't buy a house to maximize every single dollar I have. I did it because I wanted to build a life that I wanted. Now, does that mean everyone should go out and buy a house right now? The answer is no, right? You should only buy a house, like I said before, is when you are both mentally and financially prepared for it. Now, whether that is today or tomorrow or in the next 5 or 10 or 20 years. The truth is the perfect time to buy a house doesn't exist. There's always gonna be a reason or excuse to hold it off, right? Whether that's interest rates are too high, or the prices are too expensive, or you have to waive inspection to buy a house, or the market might be shaky, or you might not have enough money saved up. What matters infinitely more is understanding what your priorities are and making decisions that align with the life that you want to build, not just the one that looks best on a spreadsheet. For me, this entire process wasn't about buying real estate or buying a house. It was about buying freedom, right? Sometimes the best decisions aren't gonna be the ones that have the best ROI. Sometimes it's the ones that are gonna move you closer to the life that you wanna live. And right now, I feel pretty good about my decision. I am still having seller's high. Ask me again in 6 months. But low-key, I am pretty proud of myself. It kind of feels very surreal because I'm kind of a frugal guy, if you know, and I rarely buy expensive things for myself because I don't believe in spending money to impress others. So going from ordering Domino's pizza just because their $5.99 medium 2-topping pizza is low-key a really great deal to buying an entire house is just kind of wild. Now, obviously, I didn't get to where I am today overnight, right? It took many, many years of strategic budgeting, saving, and investing. So hopefully, if this inspires you in any way to start taking your finances a bit more seriously, whether that's because you want to buy a house or you want to achieve financial freedom or whatever in between, I made an entire video walking you through exactly what you should be doing financially speaking over the next 6.5 months to put you in a really great financial position. Make sure you click here to check that out, and I'll see you there.